Hi, this is LW Global Finance. Welcome to today's deep dive into the global markets, where we break down the stories that move the economy, Wall Street, crypto, and more.
What a day on Wall Street. I mean, records were absolutely shattered. We got some huge news on inflation, and the crypto world saw some major moves. So let's break down exactly what just happened and, more importantly, why it matters to you. First up, the big one. For the first time in history, the Dow Jones Industrial Average closed above 47,000. This is a truly historic moment for the markets, with the index just rocketing up over 1% today alone. And hey, it wasn't just the Dow having all the fun. The S&P 500 also surged to a new record high, capping off a massive rally across the board. So the big question is, what on earth lit the fuse for all of this? To answer that, here's what we're going to cover. We'll start with this record-setting rally, then we'll unpack the inflation data that really sparked it all. After that, we'll look at who wins and who loses in this kind of environment, pivot to some huge news in the crypto space, and finally, we'll look ahead to what could happen next. You know, this really wasn't a narrow rally. Along with the Dow and the S&P, the tech-heavy NASDAQ also climbed over 1.1%. This was a broad, really bullish day all across the board. So what was the single catalyst? What was powerful enough to send all three major indices soaring to new heights like this? Well, the answer dropped early this morning. And that answer came at 8:30 a.m. Eastern Time. It was the release of the September 2025 Consumer Price Index report. You know it as the CPI report. And let me tell you, this one piece of data completely changed the entire narrative for the day. Now, here's what's so incredible. Every single key metric came in cooler than expected. Month over month, year over year, both the headline number and that all-important core inflation, which, strips out volatile food and energy, were all below what analysts were forecasting. For the market, this was just a massive green light. And this quote really tells you just how powerful that data was. The optimism was so strong that it completely overshadowed other negative news, like an ongoing government shutdown. The big takeaway here is that investors now believe the Federal Reserve has a clear runway to start cutting interest rates. And you could see that belief play out instantly across all the other markets. The US dollar got weaker, and bond yields, which remember move opposite to price, they tumbled. The 10-year Treasury yield, which is a key benchmark for things like mortgage rates, actually dipped below 4%. These are all signs pointing to a less aggressive or dovish Federal Reserve. So this big shift in what everyone thinks the Fed is going to do, well, it creates a whole new landscape. And in that landscape, there are some pretty clear potential winners and losers. It's not just about stocks. These ripple effects are felt everywhere. Okay, so who are the potential winners? Well, think about sectors that are really sensitive to interest rates. Technology and other growth stocks suddenly become a lot more attractive. Consumer discretionary companies could see more people spending. And of course, the real estate and home building sectors get a direct boost from the idea of lower mortgage rates. Now, on the flip side, financials, especially banks, could face some headwinds because lower rates can really squeeze the profit margins they make on their loans. So, with the fear of those aggressive rate hikes kind of fading into the background, investor confidence just came roaring back. We're seeing this classic risk-on sentiment take hold, where money starts flowing out of safer assets and right into things like stocks. And here's the proof in the pudding. In just 1 week, investors poured over $11 billion into global equity funds. That is the largest weekly inflow we've seen in 3 weeks, and it signals a huge renewal of that appetite for risk. But, and this is a fascinating twist, at the very same time, investors also put nearly $900 million into gold and precious metals funds. This suggests that, yeah, optimism is high, but some investors are also hedging their bets, looking for that traditional safe haven just in case. All right, let's switch gears and talk about the world of digital assets, because today, two massive stories are unfolding at the exact same time. One is happening on Wall Street, and the other one is happening in Washington, D.C. First up, this whole theme of institutional adoption, it just keeps accelerating. And today, one of the biggest names in finance is making a really significant move. So get this, JP Chase is reportedly getting ready to let its institutional clients use Bitcoin and Ether as collateral for loans. And they plan to do it by the end of the year. I mean, this is a huge step in legitimizing crypto as a viable asset class inside traditional finance. They're basically saying, we'll treat this like any other collateral. Now, at the exact same time all of this is happening, let's turn to Washington. Just as the big banks are getting more involved, there's a major potential change coming in who's going to be regulating them. President Trump has nominated Michael Selig to lead the CFTC. Now, what makes this so significant is his background. He is currently the chief counsel for the SEC's own crypto task force. So you have someone with deep expertise from inside one key regulator who is now being tapped to lead the other one. And the industry's reaction has been overwhelmingly positive. This quote here from Jake Travinsky, who's a really prominent lawyer in the space, captures the feeling perfectly. There's a real sense of hope that Selig could be the one to finally bring some much-needed regulatory clarity to the digital asset industry here in the US. So after a day of record highs and all this major news, where do we go from here? The market is clearly optimistic, but as we all know, the future is never, ever certain. There are really a few key paths this could take. The Goldilocks scenario, not too hot, not too cold, that's what the market is betting on right now. But there are still big risks. Inflation could prove to be stubborn and come roaring back. The economy could slow down more than anyone expects, raising fears of a recession. Or, some external shock, like geopolitical tensions, could just throw a wrench in everything. Which really brings us to our final question for today. The market has placed a very, very firm bet that the Federal Reserve can pull off the perfect soft landing, taming inflation without cratering the economy. But with so many variables still in play, you have to ask, is that a safe bet, or is there some serious turbulence just over the horizon? And that's our breakdown. For a much deeper dive into all these topics, be sure to find our full discussion over on YouTube at LW Global Finance. Thanks so much for joining us.
Thanks for tuning in to LW Global Finance. What's your take on today's market moves? Leave a comment, share your thoughts, and don't forget to follow us for more updates and analysis.